Hello dear students, in this tutorial you are going to learn a brief about financial management. The title of the tutorial is Introduction to Financial Management. After going through this tutorial, you will learn the meaning of business finance. You will learn the need of finance in business firms. You'll also learn the meaning of financial management. The first question that may come to your mind is what is business finance? Now, in simple words, business finance is nothing but the money or the finance required for carrying out business activities. Now, what are the business activities? That may be a question. Now, these business activities start right from starting the business firm. Finance needed to establish the business, to run the business firm, to modernize the business firm, to expand the business firm, to diversify the business firm. So, what is establishment of the business? Establishment is about starting the business. So, while starting the business firm have to arrange a lot of assets. There may be fixed asset, there may be current assets. Fixed assets like machinery, furniture, building, land, all these things they need to arrange. Now, for arranging all these assets, they need finance or money in the business firm. To run the business also, finance is required. So, running means carrying the day-to-day operations of the business. Now, whatever goods or service they are going to offer, for offering those goods and services, they need to have all the arrangement of, say, raw materials. They need to have arrangement of labor. They need to have arrangement of the process. So, arranging all these things again require money or the finance. Now, to modernize the business, that means the business organization say they are going to adopt a new technology, or maybe say they are adopting a new process. Now those comes only at a cost. They have to purchase those technology, they have to purchase any new machine. So this is about modernization of the business firm. To expand the business firm also, the business firm require a lot of money. Now what is expansion? Say for example, earlier the business firm was operating only at the district level. Now with the same goods or service, they are trying to spread the business to state level. So this is expansion. Now this is a uh, horizontally the business is expanding. That means the earlier items, whatever they were offering to the market with the same item or some related item, they are expanding the business. So their geographical boundary is expanded. Now another important purpose for which finance is needed is diversification of the business. Now this diversification is horizontal expansion as well as vertical expansion of the business. That means not only the related items or not only the related products, but now they are going to offer some other products to the market. So this is diversification. So you can take the example of Tata group of companies. What products they are offering in the market? So many different, like you can talk about right from their steel, salt, then hotel business, in education, in philanthropy. Of course this philanthropy and education, these are not profit motive, but you can say those are their products. Now this is an example of diversification of business. Availability of adequate finance is crucial for the survival and growth of a business firm. So behind the success of a business firm is how the finance is managed in the organization. The next question is why there is need of finance? Well, those needs we can categorize into two. Number one, to purchase variety of assets such as machinery, factories, building, furniture, patents, trademark, and many more. Now, When we talk about machinery, factories, building, furniture, all these are tangible assets of a business firm. Whereas patents, trademark, these are intellectual property and these are intangible in nature, but this comes at a cost only. The next purpose is to run day-to-day operations of the business firm. Now, what is day-to-day operation? That means they are undertaking or carrying the production process in the organization. So what they have to arrange? They need to buy materials. They need to buy some small tools or some equipments. So purchasing those materials, purchasing those equipments, they need to arrange money. Then paying bills, like they're going to pay water bill, they're going to pay electricity bill. So paying those bills requires money or finance. Then salaries and wages to employees of the organization. And there are many related expenses for a business firm. So for carrying those operations or for carrying those activities, the business firm need money. Finance, it is needed in every stage in the life of a business entity. Now the question is, what is financial management? Financial management is the process of managing the finance in such a way that the business firm can smoothly conduct all the other activities. So it is called that finance is called the lifeblood of a business. It is the capital or it is the resource without which the business firm cannot start anything. Now, where is the management? Now, in context of financial management, the management is mainly in three aspects while sourcing the finance for a business firm. So, sourcing means from where they are going to arrange their money or arrange their finance. Is it available within the business firm or they have to arrange it from outside the business firm? Now, in practice, it is a mix of internal source as well as external source. Another aspect is investing the finance. So investing is nothing but it is utilization of the finance. Now where it is utilized? Already you know that the finance is required for purchasing asset, fixed asset, current asset or in various operations. So that is investing the finance. The third aspect is distribution of the profit or distribution of the return of the business firm. Now, in bracket, there is a word return on investment. So, this concept we will learn in another tutorial. Now, financial management ensures availability of fund in the business organization. It ensures that no fund in the organization remain idle. It also ensures that the business firm do not have to face shortage of fund, because excess of fund may also indicate that firm is not optimally using the fund, and shortage of fund is also not good for the business farmers because the operational activities may be hampered because of shortage of fund in the organization. And there lies the importance of financial management. Now to summarize, we can say all finance comes at a cost. The success of a business firm depends on how well finance is invested in assets and operations and how timely and cheaply the finance are arranged from outside or from within the business firm. So this indicates the importance of financial management in a business organization. So in our next tutorial, we'll learn the importance of financial management, objectives of financial management. So with this, we are going to conclude this session. Thank you.